What is up, guys? My name is Bryce Pruitt, this is the M1 Journey, and welcome to the channel. Hey guys, and welcome back to episode 20 of the M1 Journey. This week was another pretty flat week on the market overall. Not really any movement up or down. Tech stocks in particular were actually a little bit on the red side. Had a little bit of a slide, particularly today. So I'm going to be talking a little bit more about the markets as a whole a little bit later on. But yeah, stick around for that. So as far as anything with the channel, of course, check out my latest Let's Discuss video on Thursday where I discussed ExxonMobil. That video is done pretty well, so go check that out. Of course, follow me on Instagram, Twitter, and TikTok at bpruitt_YT. And then I can also be followed on Facebook under my name, Bryce Pruitt, or at bpruitt_YT. So go check that out if you haven't already. So then the other big news, guys, is the Walmart gift card giveaway raffle is live on Instagram, Twitter, and Facebook. Go check that out to enter. If you'd like to enter and have a chance at winning, one of the first steps you can do is to subscribe to the channel if you haven't done so already, and then go check out my other pages to get the rest of the details on how to enter. So go ahead and like and subscribe to the channel if you do enjoy my content and would like to enter into that raffle. It's a good opportunity for you guys to stay up to date on all my content, as well as get a chance to win a gift card. So who doesn't like free things? So again, go check that out. And lastly, of course, guys, before we get into the portfolio update, I have to make my disclaimer that I am just 21 years old. I am not a financial expert. I'm not an advisor. I am not certified in any way. I just strictly make these videos for entertainment purposes as a hobby. So please do your own due diligence and research before making any investment decisions. It is your money, so please do with it as you wish and at your own discretion. So let's go take a look at the portfolios. Alright guys, so it was a pretty active week for me on the markets. As you can see, overall it was pretty flat today, up about 0.5%. For the week we broke about as even as we possibly could. The only thing that made us go positive was our earned dividends. This is probably the closest I've ever been to no movement in my portfolio ever. But we're still having a pretty good month, up about 2.3% for the quarter, still chugging along, up 10%, and then all time we are up 26%. So still doing very, very well on this long-term portfolio. I did have a couple of stocks that were pretty significantly down this week, and then I had a few that did pretty well. But my one winner of the week that I will highlight is ExxonMobil, which for the week was up 7.48%. So Exxon is a stock that I just talked about in Thursday's video. So check that out if you haven't already. I will put a link probably here in the video for it. But as far as a loser, is another one of my bigger holdings, and it was Apple. Apple was down almost 6.9%. So Apple will be a stock that I'll talk a little bit more about later, because I just want to address some concerns about a potential market crash or a market correction here in the near term. So as far as other stuff I did this week, it was a pretty heavy buying week for me overall in this portfolio. I started with my delayed bi-weekly deposit. I bought Procter & Gamble, Pepsi, and Apple, and then this $20 was actually in saved up dividends, so use that extra cash to put it into Brookfield Renewable. P&G and Pepsi have really both been on a downswing lately, so I wanted to scoop up a little bit more of them. And then Apple as well was down, so wanted to buy at a little bit lower cost. So another purchase I had this week was Waste Management, which again is another one of my favorite stocks, but it had been down over the last couple of days, so I saw an opportunity to buy there. Then I deposited another $150 to buy up a little bit more of two of my ETFs, both SPYD and VOO. So that was a good opportunity there. And then I closed out last week on Friday by buying Johnson & Johnson. I'd been waiting quite a while to buy a little bit more of J&J, but hadn't really seen too much of a buying opportunity until late last week, where I wanted to beef up that position just a little bit. Then today, I made another move, smaller purchases of Microsoft, Waste Management, Brookfield, and Apple. All four of these were down pretty significantly earlier today, so I wanted to buy up just a little bit more of each, just to, again, get those positions boosted up a little bit. So as far as dividends, I got Costco and Realty Income and Procter & Gamble. Those were the 3 dividends over the last week. So that's kind of what I did in this portfolio. And then in my Roth IRA, I had my just bi-weekly deposit, no dividends, and this went through today, so that's how that shook out there. As far as my aggressive portfolio, didn't do anything with it this week. It was down almost 3%, so kind of just playing with this one for right now, just kind of see what happens, but we'll keep an eye on it and see if there's any good buying opportunities. So we'll go back to my long-term portfolio, and I just wanted to talk a little bit about some of the stocks I bought. Start here. So Pepsi and Apple and Procter & Gamble are 3 stocks in particular I want to highlight right now. All 3 are very renowned companies that I talk about fairly frequently, and are companies I plan to be buying for a very, very long time, especially in the near future. So these are 3 companies that I think would be great holdings to buy up right now ahead of a potential market crash. They are typically very defensive in those events. Definitely Pepsi and Procter & Gamble more so than Apple, but Apple still does pretty well even in turbulent times. So another company I would also look strongly at is Waste Management. Waste Management does very well because it's in the business of garbage and recycling, and that typically does not matter too much on if the economy is good or bad, so it will hold up under really any kind of economic weather. So I just want to highlight a little bit more about Apple, Pepsi, and Procter & Gamble a little more in depth from a technical perspective. So here is Apple's 3-month chart with their 200-day and 50-day moving averages. As we can see here, in the last couple days, Apple has actually moved below their 50-day moving average and are kind of hurtling towards their 200-day. So that's just kind of something to keep an eye on if you are an Apple investor and we're looking to buy more. Now might be considered a decent time to get a little bit more here in the near future. They had a rough day today, down about 3%, but I think Apple is a pretty good looking buy right now at the current price point, so that's one to keep an eye on. Pepsi is another very intriguing buy right now. Since early in 2021, they've been on a pretty significant slide. They started the year at almost $150 a share and are now at $132. Not only have they dipped below their 50-day moving average, they've also dipped now below their 200-day moving average. So, and quite significantly, I might add, their 200 days at about 137.73, and they're currently trading for about 132. So this is something to keep an eye on. I mean, depending on how much longer this slide lasts, we could see something that's called the death cross, which is when a 50-day moving average or a smaller moving average dips below a 200-day or a longer moving average. So as you can see, this line is definitely trending down, and the 200 days staying relatively flat. So if this purple line crosses this red line, that's what people who read charts call the death cross, which generally indicates a sell signal. But I am a little bit more bullish on Pepsi, so I think it is a great buying opportunity at its current price. And then, of course, the last one I want to talk about today is Procter & Gamble. Procter & Gamble is on a very similar slide as Pepsi is. Since the early part of 2021, they've dropped off pretty heavily. They dropped below the 50-day moving average pretty early in the year, and have dropped below the 200-day about a month ago actually, and they've hung below that ever since. This one is even closer to that death cross that I mentioned about Pepsi. But again, I'm pretty bullish on Procter & Gamble over the long haul. I think Procter & Gamble is a very attractive buy in really any kind of economic climate. So that might be another one to strongly consider in anticipation for another market crash. So that's a little bit about what I'm doing right now. I expect I will continue to buy pretty aggressively depending on how things shake out. I expect we could be coming upon some volatility here in the near term, but nothing's guaranteed in the markets, so I'm definitely not predicting that, but I'm definitely getting some anticipation for that, and when it does, I will be hopefully quick to act. So I'm going to get into my final comments and wrap the video up. So that's gonna just about do it for this video. I know I kind of talked a little bit about a potential for a market crash or a market correction. I just want to be known that I am not predicting anything. I definitely do not know when or if or how this will happen, but they usually do every so often, regardless of if the economy is good or bad. It's just to be expected. I would have to say that we are at least a little bit overdue for a little bit of a market pullback, considering everything still going on with the economy and with the pandemic. So it's just something to kind of keep an eye on. These are things that aren't really to be too wary of. I mean, it's not fun losing money, but I see them more as buying opportunities, which is why I'm picking up some of these stocks right now, because I think they will offer great value in any kind of economy that's either good or bad. Most of these companies are the ones that you are already familiar with, but in case you aren't, do some research on them, check them out, see what you think, and share your thoughts down in the comments, whether you agree or disagree with me. So that's going to do it for this video. If you'd like to sign up on M1 Finance, please do so using my link. Right now they're doing a special promotion where you get $30 just for signing up and making your first deposit. But full disclosure, I will also get $30 when you do that, just as a win-win for both of us. But that promotion does end February 28th. If you do after that, then it will just go down to the normal $10 reward. So again, guys, like and subscribe if you enjoyed the video and enjoyed my other content, and I will see you guys on Thursday.